All right, we are live, folks. Okay, I am looking at Microsoft. Pardon me. And specifically, what I want to see, and this chart will be usually not as good, but in this case it will be. What we see on earnings. This is the last four, and just trust me on going back further. That buying a call a week before earnings, which is where we are right now, has worked 11 out of 12 times. Buying it 7 days or 14 days beforehand. So what I'm looking at, and we may just buy the call because I don't think implied volatility is coming in, right? I mean, how often do you see implied volatility? We may have a little bit of theta. Implied volatility is already up there. We can look at it either way. We'll see if it's a spread or if it's a call that we should be looking at. But let's see. Let's bring out our trading tool here, and we got Microsoft. Microsoft trading at 110.58. 110.58, and we're going to go out to the 26th. Earnings are on the 24th, and the 24th earnings, the 26th implied volatility is 37.6. So we are targeting about the 116-ish line. We are trading 110. We definitely have room to go here. So if we do something like a 113, 116 call spread, that's trading for 87 cents. 84.90 is our bid ask on that one. 16. And that is trading for, let's just say, 88 cents. Come on, don't start running on me here. That is 2.4 to 1. Or we could do, which I'm perfectly fine with, and we could do the 1416. That's only going to trade for 52 cents. 52 cents. And that is the 114, 116. That's 2.85 to 1. Can do a little bit more of those, and I'm being conservative, remember, because we can, the 59 confidence interval is 116, the full standard deviation is 117, but of course this also has earnings in it. We're not going to take it through earnings, we're going to take it up to earnings. So let's back off of that a little bit. Let's go the 113, 115 and see if that works for us. That is going to trade for 65 cents. 65 cents, and that is the 113, 115. That's only 2.08 to 1. So that's not good. But not good enough. But I really like, because the 16th has the movement. We're paying for the movement of the earnings, and that's not necessarily going to be true. So that's what I'm saying, targeting 116 is too aggressive. If we take it down to a 30, vol, that's still targeting 115. The 14.15, it's going to be a little exacting, but I'm trading for 29 cents. That's a little bit better. 114, 115. And that is trading for, if we get in there for 30 cents, 2.33 to 1. I like the reward to risk. I like the trade in itself. The reward to risk is on the low end of the spectrum. I agree. But with something that has been happening, and it's not like these are, we're taking out all-time highs here. I think buying this for 30 cents is the recipe. All right, so I'm going to put that. I never left. Well, I mean, I did leave, but I told you guys I came back. Let's see. When I get back at 10:18. I've been here ever since. Hey Rick, we're talking about. Hang on, let me get the signal out, and then we'll go over this in more detail. All right, I did record this, but I'll just leave the recorder going.